Did you know that Leo KoGuan is the third largest Tesla shareholder? And he's at some point lost almost all of his Tesla shares. Tesla's share prices have fluctuated in the past months, and this has had several effects on Tesla investors globally, even big shareholders like Leo KoGuan. While Tesla's market fundamentals may show the potential for a surge in the stock price of the automaker, it is usually uncertain when the next stock crash will happen. Hey guys, welcome back to Tesla Tomorrow. Leo KoGuan is Tesla's third largest individual shareholder after Elon Musk and Larry Ellison. The Indonesian-born billionaire is a longtime Tesla bull, and he currently has about 23,201,500 shares of the car company. But KoGuan's investment history is not as easy and smooth as it may seem. The Tesla investors had its own fair share of losses. According to KoGuan, while buying Tesla stock is a good investment opportunity, it is best to reduce the risk on investments as much as you can. Why has the bull said this? Well, let's find out. But before we do, if you like this type of content, don't forget to like and subscribe, and don't forget to turn on notifications to keep up to date on everything going on with Tesla. Early 2020, Leo KoGuan had 2.3 million shares of Tesla, but this was before the 5-to-1 split, which amounted to about 12 million after the first split, and would have been about 36 million Tesla shares after the largest stock split. At the time, Tesla shares were trading at about $34 per share, which gives approximately $1.2 billion as the total worth of his shares. However, following the crash in Tesla stock prices in March due to the effects of the pandemic, Tesla shares dropped nearly 50%, and it caused KoGuan to lose a significant part of his investment in Tesla. 2 years ago, Tesla was grappling with the impact of the pandemic, and the impact was seen not only in China but in markets worldwide. It forced temporary closures of Tesla's Shanghai car plant, which was new at the time, and stores throughout the country. Likewise, inflation and the war in Ukraine threatened access to Russia's nickel production and had put pressure on Tesla, resulting in significant price increases. Tesla hiked the price of its long-range versions of the Model 3 and Y by $1,000, as well as prices on every EV it sells by between 5 and 10%. On the 9th of March 2020, Tesla shares plummeted by 13.6%, dropping 6 percentage points more than the S&P 500 for the day. The plunging oil prices and the continuing pandemic weighed in on investors. The stock also bottomed at $350.50 on March 18th, 2020, during the pandemic-driven sell-off. Following the events that preceded, Wedbush Securities' Dan Ives wrote in a note to investors that Tesla's outlook in China is strong over the long term, but is challenged throughout 2020. According to him, supply chain issues in China remain a lingering worry, and given the demand overhang from the pandemic in China as well as Europe, he believed that the first quarter unit demand levels will be difficult for Tesla to reach. However, although Tesla stock was majorly affected by the hit of the pandemic, the car company still managed to give out significant growth during the time. Tesla's CEO Elon Musk said in a podcast in 2020 that demand for the car company's electric vehicles remained strong through the pandemic, with consumers preferring to shop online. In October, during the year of the pandemic, Tesla said that it more than doubled its third quarter profits, as the company announced delivering a record number of electric automobiles amid a pandemic that crippled its fellow automakers. In a letter to investors, Tesla stated that it delivered 139,300 vehicles in the third quarter, a new quarterly record. Also, while investors like Leo KoGuan may have experienced great devaluation on their share holdings, there are still several factors that can cause Tesla shares to increase in the coming years. In September, the European new car market saw growth for the second consecutive month, following the 3.5% increase in total volume recorded in August, and Tesla Model Y topped European sales for both traditional internal combustion engine vehicles as well as BEV vehicles. According to reports then, Tesla's market share in Europe this year is going to be around 1%, rising up to between 1.8 and 2.1% next year. Increased sales such as this will usually lead to increased revenue for Tesla, which is going to have a positive impact on the stock price of Tesla. It appeared that Leo KoGuan was too optimistic about Tesla's future. While this is not much of a problem in the long term, it's not good news for investors who are putting in money for the short term. Investors may decide to buy shares with their personal funding or may do so through margin borrowing. While KoGuan's investment in Tesla is composed majorly by private funding, he did also admit to obtaining some of the funds from other sources, like margin borrowing. Simply put, buying stocks on margin means borrowing money from a broker to buy a stock or securities. This method of investing is most suitable for short-term deals, where returns are expected within a short period of time. Tesla stock, just like any other stock, is highly affected by the volatility of the stock market, and therefore a change in the stock price is usually unpredictable. However, there are factors that can potentially cause a stock price to rise in the future. KoGuan is a strong advocate for buying back shares of Tesla. According to him, Tesla's going to have a huge market cap by 2030, can do a $1 trillion buyback between 2030, if it can do a $1 trillion buyback between 2026 and 2023. KoGuan said in a tweet that he requested that Tesla does a $100 billion buyback between 2022 to 2026, and then a $1 trillion buyback from 2026 to 2030. Since stock buybacks remove cash from a company's balance sheet and potentially reduce the number of shares outstanding, they can have a wide impact on the key metrics investors use to value a public company. And some analysts believe that this could be a good way to boost Tesla's stock price in times like this. Going into further detail, KoGuan stated that if Tesla buys back its shares at $1,000 per share between 2026 to 2030, it's going to remove $1 billion out of the 3.14 billion shares available today, reducing the number of outstanding shares to around 2.14 billion. Since there will be fewer shares available to investors, the stock price could shoot up from $3,000 to $5,000 per share. Likewise, earlier in May, KoGuan called on Tesla to announce a $15 billion stock buyback when the company's share price continued to fall at the time. He said this via a tweet to Martin Viecha, Tesla's Senior Director of Investor Relations, stating that Tesla should immediately announce its plans to buy back $5 billion worth of its shares this year and $10 billion in the next year. He added that Tesla could use its free cash flow to fund the buyback, stating that the move shouldn't affect its existing $18 billion cash reserves. Also in October, KoGuan stated via a tweet that Tesla's declining PE ratio can be solved only by a buyback, and by increasing earnings to twice its value. Sometime after this tweet, Musk replied, "Noted," indicating a possibility of this actually happening. Aside from his response at the time, Musk has confirmed that Tesla may be doing a share buyback soon. The Tesla CEO said during the automaker's Q3 earnings call that the company is likely to do a meaningful buyback next year, between $5 to $10 billion possibly. He said previously that it would be up to Tesla's board to decide. Leo KoGuan advised retail investors to avoid margin borrowing. According to him, although this can be interesting while the stock is doing well, it becomes quite the opposite when the stock's down. He also encouraged investors to reduce their investing risks as much as possible and to buy shares with their own money. And when the investor does yield profits, they should also load up on even more shares. Long-term stock investors often do not count their losses or gains until they're ready to sell. For an investor who's willing to keep Tesla stocks for a long time, the current undervaluation of the stock should not be much of a problem, as the stock price is still expected to soar in the future. While KoGuan, like Musk, does believe that Tesla will one day be worth more than Apple and Saudi Aramco combined, it's still a little bit over-optimistic, which could be dangerous for short-term investors. What is the biggest stock crash you've experienced as a Tesla investor? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.